In this presentation, we will take a look at the Circular 230, an important document for tax preparers that can be found on the IRS website at irs.gov. For more accounting information and accounting courses, visit our website at accountinginstruction.info. The Circular 230 sets forth rules which must be followed by all paid tax preparers. So if we are a paid tax preparer, we need to be familiar with the Circular 230. In other words, if we're filing our own taxes, this isn't applicable, or at least not as applicable to us. We may still want to take a look at it in case we're getting guidance and help with. I do recommend getting guidance and help with the taxes. If we are being a paid preparer, however, then this will definitely apply, and we'd want to be familiar with the Circular 230, know where to find it, irs.gov, and be familiar with it. It includes ethical standards and expectations, and this is going to be important. We need to have some guidance in terms of what do we do and what do we not do as tax preparers, because we are subject and we do have the ability to use and see some personal information. How can we use that personal information? What's the proper way to use it within the profession of tax preparation? Here are just a few rules, a few takeaways. Paid preparers need to sign all tax returns they prepare. The IRS is going to be concerned with who's doing the preparation. So they want to know not only whose taxes they are, but if there was a paid preparer, who the paid preparer is. So we have to actually have the signature authorization from the paid preparer as well as the tax preparer. Provide a copy to the clients. So a lot of the stuff is going to be e-filed at this time. But of course, we still need to provide the client the copy. And remember that when the IRS is going to ask a question, if there's an audit, they're going to go to the client. And so they of course, the client's going to need the information in order to answer the questions. So we want to make sure that we provide that information to the client, get authorization in order to do any type of filing, e-filing. Return records to the client. This is the case even if we're in a situation where we don't complete the return or something like that, something happened, and these are the client's data, so we want to make sure that we don't get in a situation where we're going to be holding on to the information until something happens, like we get paid or something like that. We're going to have to return the client data, their records, to the client. We have exercise due diligence and best practices. That means that we're going to have to go through the full process in terms of making the tax return. And that's clearly, when we think about due diligence, what is due diligence? How much work is due diligence to prepare the tax return? We're always going to have questions that, nothing's perfect within the tax code. There's going to be estimates. There's going to be estimates in relation to taxes many times, maybe not all the time, but many times. And so we have to do our due diligence in order to make sure that we've asked the questions necessary, taken the steps necessary in order to prepare the financial statements to the best of our ability. Notify clients of errors on the client return. If we do find an error, then we need to tell the client that. So if we see the error, then we need to inform the client about the error to the return. Provide information to the IRS as needed. Inform a client if the client made an error. Again, if we see that error, we need to report it or let the client know about it. Paid preparers must not. So this is just as important to know what we need to do, what we need not to do. So we're not going to take a position unless it has a realistic possibility of being sustained. What does that mean? When we're talking about taking a position, remember that there's a lot of gray area within the tax code. I mean, if the tax return is going to be very basic, just have W-2 income, for example, then everything is fairly straightforward. But as the taxes get more complicated, we're going to have those gray areas. The tax law in and of itself will not cover all the questions that we will start to have. And therefore, when we see these kind of gray areas, the question is, what position should we take? Should we take a more aggressive position, resulting in fewer taxes to the client, or a more conservative position, resulting in the client paying more, but possibly being on the conservative side to pay more and therefore less likely to cause any problems on the IRS side? So how aggressive do we want to be in our stances? Well, we need to make sure that we have a realistic possibility of the outcome being sustained if it was held up to review by the tax court. In other words, what we don't want to do is take the position that it's unlikely to be audited or something like that, and therefore that's our reasoning process. No, the reasoning process needs to be, if it was audited, that I would have a realistic possibility of the position being sustained within the audit. Doesn't mean that you're sure that it's going to be sustained, but it means that you think that if you were questioned on it, that you can put an argument together, and you're not just relying, of course, on not being audited for taking a position. You're thinking it's a valid position to some degree. Change in charge of contingent fees. This is always an issue, and you want to be really careful with tax preparation on contingent fees and things like contingent on, say, how much the refund would be, because the IRS sees that as a conflict of interest to some degree. If you're making your payments, how much you're going to get paid based on some percentage of the refund, then they see that as too much incentive to have pressure to make a larger refund, even at the cost of possibly problems in the future, take positions that would be not sustainable. So you want to not have the conflict of interest, and on the contingent fees, be really careful on what types of services you provide contingent fees. It really can be beneficial in some cases, and but it could also make the advice you're giving seem at least to be not as independent. And you want that feeling of independence. So when you want that independence of this, I'm giving you an independent advice, not contingent on the fees I'm getting, then you want to kind of avoid things like contingent and try to have like a flat fee. And if you do win, and if you use contingent fees in any kind of service, you just want to be transparent about that. The paid preparer should not cash an IRS check for a client, and the IRS really does not want to see paid preparers cashing checks, because that could lead to a system where paid preparers have an incentive to take the check. So, of course, as kind of a system of internal control, the IRS wants the check, the payment, to go directly to the client and be cashed or dealt with by the client directly. Represent a client if a conflict of interest exists. A conflict of interest means that we have some type of interest ourselves, our personal interest, that is contrary in conflict with the client interest. And when we're looking at something like representation, look at what we're doing here. We're representing to the IRS our client. We're taking our client's position and acting as an agent, kind of like a lawyer acting as an agent, representing them to the IRS. If we have a conflict of our personal interest there, then that's going to skew our perspective, and at least in perception could skew the power of what we're saying, because people could misjudge what we're saying for our personal interest rather than in the best interest of the client. So whenever we're speaking for somebody else, we want to make sure that we're careful or aware of or disclose any conflict of interest, because even if we believe we're completely unbiased, people will at least have the perception of there could be a conflict of interest. And notice that's the same kind of issue that we have with the contingent fees. If our service is based on a contingent fee, then the positions we take, even if we might take aggressive positions to get larger refunds because we get more of a contingent fee there. Even if we think the positions are completely valid, because of if we were to take a contingent fee, notice the perception that people would have of us taking an aggressive position would be that you're just doing that to be self-serving. And that may or may not be the case, but that's the perception. And those are the types of things we want to steer clear of if possible. Make false or fraudulent statements. So clearly we don't want to falsify. We can't falsify anything on the tax return. And just note that people get in trouble with this on the tax returns because they actually take, fraudulent cases will take the position that we're going to file fraudulent returns and try to be under the radar of the IRS, because the IRS is only going to audit a certain percentage. If you look at the percentage of audits, it's kind of like any law. The IRS is going to audit a certain percentage. So the likelihood of the audit is actually fairly low, but when the audit happens, the penalty could be substantially high in order to deter people from taking false positions. And so people could take the view that they're going to try to make false returns, get a higher refund, and see how long they can go before an audit happens. Of course, that's not the position that you want to take as a tax preparer, because at some point in time you're going to run into problems. But just from an ethical standpoint as well, that's not the position you want to take. And of course, one of the penalties when caught would be to take away the ability for tax preparers to prepare returns in the future. That's a potential penalty that could happen in the case of filing fraudulent returns. So if you want a long-term business within tax, then you don't want to have to worry about taking fraudulent positions and that aren't defendable. Now, if it is defendable, if you're taking a position that is justified, defendable, you have a position that you think you could sustain, then that's a different story. But false positions, of course, fraudulent positions, no. If we go to the website irs.gov and type in Circular 230, you can find a PDF document and you can review through the Circular 230 on your own. For more accounting information and accounting courses, visit our website at accountinginstruction.info.